Hi there, my name's Carl Baker. I'm the managing member and owner of Infinity Commercial Capital, a financing advisory firm, a brokerage, and Baker CFO Advisory, a professional services firm providing accounting and fractional CFO services. We get asked all the time from real estate investors and business owners what we can do to help them find working capital. So I'm going to do a couple videos. The questions that we get asked are usually the same. So I'm going to do a couple videos explaining business credit, especially as it pertains to working capital and lines of credit, just accessing cash to run a business. So I'm going to explain the concepts and where to get funding, and then I'm going to explain in a second video a service that we provide that has provided a lot of value to a lot of clients, including myself. I'm personally a client of this very service. So let's go through this first video and explain the concepts. So when people call us, it's important to understand where funding comes from. And people say, I need $50,000, I need $20,000. Well, you can't just throw up a request without understanding the universe of options and understanding how banks think about working capital and business lending. So I just think it's important to understand a few concepts. First of all, funding comes from 5 sources, and this is the universe of options: personal cash reserves, friends and family, business partner, finding a business partner with funding, term loans, whether it's SBA, other types of term loans. It's important to understand unsecured or secured financing. And then an option that we're going to head towards here in this video is lines of credit, credit cards, whether they are unsecured or secured. I think it's important to understand how lenders think. Lenders look at the 4 C's and fit borrowers into this box: cash flow, credit, collateral, and capacity of borrower. So as you're looking at a business, a lender is going to look at some version of that, of those 4 C's. I think a revolving line of credit is a foundational exercise and is oftentimes the best path when a business owner is simply looking for money to fund business, buy inventory, pay payroll, etc. And I think it's important to have more money than what you think you need, and to obtain it before you think you need it. So I tell people having $50,000 in an unsecured line of credit is better than having $50,000 in cash, because that funding is always there. So where to go for this funding? Well, you're going to eventually go to a bank. When you borrow, you're borrowing either personally or under a business name, and you're borrowing either under a secured or an unsecured basis, and you're borrowing we think it's important to separate your business and personal activities for protecting your personal credit and just not commingling those activities. So I tell people that we're all on a credit building mountain. We've never reached the top. Credit is an intangible asset, and it's good to understand personal versus business. So we think it's important to build business credit. And we think there's 2 ways, we've found through experience, there's 2 ways to build business credit. The first gateway to building that business credit is having strong personal credit. The second getaway is then building trade lines. And think Home Depot or Lowe's. Whether you're borrowing it, whether you're getting one of those lines of credit in a personal name or a corporate name, that's what we mean by a trade line. So you want to build a lot of trade lines, 10, 15 trade lines, and have strong personal credit. When we say true business credit, we're actually meaning a business line of credit that does not show up on your credit profile. So I'm going to continue this in a second video, and stick with me, and we're going to continue the discussion about building business credit. Thanks a lot.